Okay, welcome back everyone. And today we are going to be taking some look into the market. You know that this is a new week. We are going to be looking what the market holds for us this new week. First of all, we have the DXY printing bearishly here, and you can see it on the chart right here. We are seeing the weekly chart just printing bearish, and we just go to the daily. And in the daily here, first out, I want to make it clear that last week and even the week before, I have been posting weekly analysis on the market. And this week, there's nothing different. It's just that we are going to hit the perfect spot on this one. So like I told you previously, the dollar has been bullish to the upside, and this is really risky for those who are trying to be going against the dollar, because it will always get you down. So if you are looking towards this uptrend, we find out that we have some level of buy side liquidity which the market did not touch, and also that we had this low. This is a previous low here. Also we had this low, price took it out, and price did not took the buy side liquidity, but instead price tends to drop downward towards the sell side liquidity. And this could only mean one thing. That means market structure have shifted to the bearish side for the dollar. Now, in other form, we have this open gap here, which was on Tuesday to Wednesday. We have the open gap there, and that can be a point of resistance if price attempts to get to that level again. We have this buy side liquidity up here, which price, now for those of you who like to use order block, also we have the daily order block, which is one of the strongest arrays in the smart money concept. So price will likely reach out to this low on the dollar, and the dollar is still very bearish right now. And we go into the Euro USD. So on Euro USD, we are going to see similar thing, but these are just what opposites from the dollar. So the euro is moving upward, but I already did some level of analysis on the day before today, which in the 4-hour time frame, I have just 2 entry in this level. That means if price come below the 0.50% level, I have just 2 entry. My entry number 1 will be this, below this liquidity, the sell side liquidity, and the entry number 2 will be the order block. Now I'm going to ignore this order block, because most time if price get to there, if you add manipulation and whatever, price may likely break this level towards there. So at least I'm going to be risking a few percentage if I actually get into this trade. Like the previous one, I told you that we have just 3 entry, and one of the entry was this, and the second was around this level, which price respected a little bit, and before price reached to this high. So if more likely we are going to see price retrace into our zone again, we are going to enter just below this liquidity or this liquidity itself. You can just set your buy order at this point, and if definitely they get you in, it will be nice, because they are not going to push price below this order block. If they push price below this order block, one thing you should take note, this high. If this high is hard, you should be careful, because most time they might send price down to this low, the low here. So we are going to try our best just to stay safe in the market. So if we have this retracement as I have anticipated to, hopefully we are going to see, we are going to enter, and likely we are going to make up to 200 or 100 pips at least, because back to this high or above this give us, let's say our target will be around 200 pips, and which is a very fair target for any trade that you are going to hold at least 5 to 4 days. So most time we do some trade around a week, and we are in profit throughout this process. That's how I trade.